You've got this whole overlay when it does come to the property market more broadly. Country Garden, you can probably still add Evergrande to that mix, and a raft of developers. The demand profile in a lot of the tier 3, tier 4, tier 5 cities is absolutely derisory as well. How do you fix it?
I think it's difficult, Will. So we, as a house, have been saying that the Chinese housing market will likely go through a multi-year deleveraging process. And from a growth standpoint, we think that housing demand will be weak in the years ahead and will be a drag to economic growth, at least for the next few years. So I think what you said is perfectly right. Basically, we have a persistent demand problem in the housing market, and I think that problem is now percolating to the financial economy, as evidenced by some liquidity issues faced by property developers and also in the trust industries. Now, in terms of policy response, I think clearly the response has so far been positive, but I would say it has been relatively moderate and also piecemeal in nature compared to market expectation. And the weakness in the July macro data points definitely suggests that or put more urgency for policymakers to react in a more forceful and decisive manner.
And the problem as well is that, you know, so much of the property market was, and I suppose the demand was generated on the speculative side. And if you don't have that demand coming through because people just aren't speculating, period, and the sheer enormity of the size of the property market in China vis-a-vis, you know, even just the equity markets more broadly, doesn't the fact that you do have this demand weakness signal that there's a lot more afoot? In terms of, because if the prices are remaining relatively flat, if the expectation is that you're going to see them go up, then you would think that people would be willing to invest, but they're just not right now.
Yeah, and I would say a couple of things. Number one is difficult to define speculation and real demand just from a macro perspective. But I would say I think one of the issues in the economy right now, whether it's for investment or for consumption, is that the real interest rate levels are very elevated in China. So despite the recent rate cuts delivered by the PBOC, given the inflationary pressures are still coming down, so on a real basis, you're still talking about 2 to 3 percentage point in terms of real interest rates, which put China as one of the highest in the world when it comes to that financial condition metrics. So I think to stimulate demand as a whole, we need to see further easing in financial conditions, and that's why our economists are expecting more triple R cuts and more rate cuts in the months ahead.